Hello and welcome to this August 26, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Bowley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are looking at Advanced Energy Industries, ticker symbol AEIS. This is a little more than a $600 million technology company. Taking a look at the chart technically, you can see that we've been in a pretty nice uptrend here over the last few months, but that came on the heels of a pretty swift move to the downside back in late April, early May. You can see this pretty steep decline. We've since been recovering, but at the end of, or actually middle of July, we had what we referred to as a breakaway gap. Normally what you see here is a stock that's been going mostly sideways or maybe down for a little while. You kind of get a break out of that rut that the stock was in. Normally what you see is a Maribozu type candle where you open at the low, you close near the high, and also on very, very heavy volume. And you can see this was the heaviest volume by far over the last 10 months. So this is the type of candle that I would treat like a breakaway gap and Maribozu candle back in mid-July. Since that time, we did go up a little bit higher. We got up to about $18.50, pulled all the way back down, and notice that we've been holding this $15 area, which is this is the top of our gap support. And notice prior to this gap up, we had a couple of tops up around 1440 to 1450, which had held as price resistance prior to this gap up. Now on Wednesday's selling, you can see we came all the way down. We put in a tail right at this 1438 area, which was just about sitting right on price support, what used to be resistance but became support on the gap up. So we went down, we tested that. Notice the big reversal here. We held the 50-day moving average, and we put in a bullish engulfing candlestick all in the process. Volume did pick up a tick. As you can see, the volume was a little bit heavier. So all in all, a pretty good candlestick for AEIS in the near term, and this is suggesting a reversal in the stock. So to the downside, I'd be looking maybe around the 1440, 1450 area. If we close down below that, very much below that, I'd be out of the stock, especially if the volume picks up. But otherwise, I would look for another move back up to challenge the 18.25 to 1850 area. You've got a MACD now, which was pretty stretched to the upside. You can see over the last 10 months, when we got up to 18.25, we had the MACD as high as we have seen it over the entire 2010, even into last year, toward the end of 2009. So a very stretched MACD, suggesting that things were just getting a little bit too far ahead of itself. You can see also the RSI had been up around 70, 75 as we headed into the early part of August. So all of that, we needed a little bit of unwinding. And with the recent selling, movement back down to price support, you can see that the RSI fell from over 70 down to in the mid-40s, and stochastics, which had reached almost 100, had fallen all the way back down into the teens, finishing at 16.25 on Wednesday. So AEIS looks like a pretty good reward to risk candidate on the long side. Again, I'd watch about 1440 to 1450 on the downside, and I'd look for this reversing candlestick to start a new trend to the upside and look for 18.25 topside. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.